Holy smokers, that ain't no dang jokers. Look at that. Another day of small caps rolling, the hated stocks rolling. Elf Beauty up 8.5% in the public account here today. Revolve up 3.4%. Estee Lauder was up right around $5,000 for us here today. Honest made a nice move upward. Nvidia, I mean, the stock market can be such a troll. You know, Nvidia, so many people were playing 190 calls, 200 calls, thinking the stock was going to blast higher. A lot of other people were playing 165 puts, 160 puts, thinking Nvidia stock was going to crash. And what does Nvidia stock do? It makes a 3% move and puts everybody to sleep. Unbelievable. Google news just came out here today that they eliminated about 30% of their manager roles of small teams. Google's been a position that's been performing very, very well. AMD, everybody's looking at what's happened here with Nvidia. They're like, does this mean bad things for AMD moving forward? Where's AMD stock going? Is it headed down all the way to Chinatown? All those sorts of things. Okay, so in four core subjects I want to speak about in this video here today. One is this momentum in small caps, the hated stocks, is it going to keep on, or is this just a little short-term thing and then it's going to end? Okay. Two, Nvidia. We'll dive into Nvidia. I got some I would say I've got some points that if you're bearish on Nvidia, you're going to like some of the points I bring out here, because there are only things you're going to have to dig deep in the numbers for. If you're bullish on Nvidia, I'm going to share some data with you, some numbers on where Nvidia is headed here that I think you would be very excited about. So I got a little bit for both sides in this one here today, okay? Third subject we'll get into in this video here today, Google McDougal, what's going on there, my views on that. I want to tell you what's actually going on, okay? Now, let people kind of understand what's going on there. Fourth thing we'll get into is AMD, where AMD is headed from here, given the NVIDIA news. One thing only I need from you guys, smash a thumbs up for me. If you could just do that for me, please. Hit that like button, that thumbs up button, just tap it, make it glow. That's all I need from you, okay? I appreciate you for being here. If you want to subscribe to the channel, you can certainly subscribe. We are now over 880,000 subscribers here on the main channel, so I appreciate y'all for being here, okay? Additionally, we're only a few days away from the massive sale we're going to have for my highest end Patreon tier. If you want access to this deal, it's in 4 days from now, click the pinned comment down there, put in your name and or your email and your phone number if you want. If you want to receive the deal via text, put your number in. If you want to receive it just email, put in your email, okay? We'll send over the deal when it drops. It's 4 days away. That's my highest end tier for $49. Two things I need to cover. One is, that's no teaser rate. People are like, well, maybe it's $49 for the first month, then it jumps to $125. I know a lot of businesses and companies do that crap nowadays. I'm old school. If it's $49 a month, it's $49 a month. As long as you have an active subscription, it'll be $49 a month. Now, if you cancel and then you want to come back 3 months later, no. We don't play those games, okay? But it's $49, okay? Additionally, that's going to be access to my #1 stock market course ever, my Becoming Master Stock Market course. Access to see the stocks I'm buying and selling each week with screenshots in the Patreon portfolio. Additionally, access to the Patreon Discord chat. That is not my private stock group. My private stock group's a whole different deal, but this is phenomenal, especially for a lot of folks that maybe in your first year or two of investing. This is like a great step for you to head in the right direction and take your knowledge up to a much higher level than where you're at, okay? Alrighty, guys, so let's get rolling here, okay? Already, smalls, hated stocks rolling. First off, why was Elf Beauty up 8.5%? Like, the stock market was hardly up today. How's Elf just making 8.5% move? Let me take you inside what actually happened. A company named Kohl's, I'm sure you guys know it. It's a retailer, rather popular retailer in a lot of strip malls across the United States of America. Kohl's reported earnings in the morning, okay? Kohl's stock blasted higher 24 percentage points. An absolutely massive move. If anybody had some Kohl's call options on this week, you probably made hundreds of percent or thousands of percent literally today. Like, that's just ridiculous, okay? So stock blasts higher, like insane, right? But what does it have to do with Elf, right? Well, here's the deal. Kohl's reported their second quarter adjusted earnings that nearly doubled analyst expectations, causing the stock to soar. The department store giant attributed much of its success to its partnership with beauty retailer Sephora, which has now rolled out to all of its locations. Kohl's noted that its beauty sales have surged, positioning the company to build to a $2 billion beauty business. The positive news from a major retailer suggests strong underlying demand for cosmetics and skincare products, which is likely boosting investor confidence in specialized beauty companies like Elf Beauty. When you think about Elf Beauty, here's the deal. You think about a company that really caters to the mass market. Like, Elf Beauty's selling to everybody. Elf Beauty is selling to the teenage girl in high school. Elf Beauty is selling to the 25-year-old woman getting her business career started. Elf Beauty is selling to the 40-year-old middle-class mom. It's selling to everybody. Like Elf products, almost every Elf product you can possibly find, almost every single one is under $20, right? And many are under $10. And they have good quality products. Everybody always has positive things to say about it. They understand social media on a high level. So, Kohl's, it's a natural extension, right? So for these sorts of partnerships, and Elf could be seen as one of the biggest beneficiaries of something like this, right? So this means likely good things for Elf numbers down the road here that we'll see over the next few quarters. Additionally, the Rode acquisition will be has now gone through, and so we're going to start to see that show up in the numbers over this next few quarters. And I mean, it's just going to be very, very exciting times with Elf Beauty's growth again, which, let's be honest, a lot of people play Elf Beauty. At this stage in Elf's company history, people are playing Elf for that revenue growth. They love that revenue growth story. And Elf is getting back to that revenue growth story. We're going to see, even this upcoming quarter, we're going to see revenue growth blast higher for the company. And that's going to continue for at least the next 1 to 2 years in terms of the insane growth rates before it starts to slow a bit, right? Now, here's the thing with Elf and where Elf stock is headed, okay? Listen. We're headed to 200 plus. We're headed to all-time highs in the stock. There's going to be all this teasing. Elf's going to make some insane moves like it did today, 8.5% in a day, right? And it's going to blast higher. Then it's going to go down. Then it's going to blast higher. Then it's going to go down. It's going to be teasing back and forth. But at the end of the day, we're headed to 200 plus in the stock. And it's just a question of, do we hit that 200 plus level this year, as in 2025, or do we hit it next year? That's the only question for me. Because as those revenue growth rates start to come in, you're going to see more and more Wall Streeters pile into the stock. And that's not too far in the future, because that revenue growth skyrocketing I'm talking about here is going to start showing up even as soon as this next quarter. And then we go from there. So we're headed back to 200 plus on this one, right? Now, in regards to small cap stocks in general, the hated stocks, like these ones that are, seeing all this momentum, is this going to continue? Or is this going to slow? Like, well, what's going on here, okay? Listen, I said, AI, let me know what's going on here. Because last time I checked, when the Fed cuts interest rates, usually it means good thing for the stock market, right? So here's what AI told me. It said, when interest rate cuts are coming, the stock market often performs well, with historical averages showing strong gains in S&P 500 after the first rate cut, or after the first cut, right? This is because lower interest rates make it cheaper for businesses to borrow and expand, and they can push investors to seek higher returns in equities. Here's the deal, okay? We all know that. Like what I just typed in there, everybody in the stock market that knows anything about the stock market knows that, right? Here's the deal. If we get that rate cut, right, and people become more confident that the rate cut's coming, what's going to happen is people front run this. They always front run nowadays. Because there's no secret data on the stock market. Like, how does the stock market do on this month versus this month? How does the stock market do when the Fed cuts rates? The data's all out there now. Everybody has the same data. You can all type it into Google, right? We can use Gemini, we can use ChatGPT, whatever you want to use. There's no secret hidden data no one knows about in regards to how the market usually performs. So what happens is people always front run it. They front run it. So before you get to the first rate cut, the market already rallies. So if investors in Wall Street become more confident the Fed is going to cut in September, they'll continue to front run that cut. And they'll continue to buy stocks heavily before the cut ever comes, because they're looking at the data and they say stocks usually go up significantly after that cut. Now, the weird thing about the market nowadays is because there can be so much momentum front running a move, that when you get to the move, it doesn't always perform the way historical patterns you would think they would run, essentially. So it is very possible that we run heavy into that first rate cut, and let's say that first rate cut is at some point in September. Let's say the middle of September, end of September, right? It's very possible small caps rally heavy, the hated stocks run heavy, dividend stocks run heavy into that cut, right? And then it's very possible that after that cut comes, maybe the market all of a sudden takes a big breather, maybe the market even downtrends for a bit. Just because it's a historical standard does not mean that's going to be what happens. People front run these things, and then all of a sudden you can lose momentum. So, would I be shocked if these small caps continue to run heavy the next 3 or 4 weeks into that first rate cut? I wouldn't be surprised at all. And then would I be surprised if the market downtrended a bit after the first rate cut comes? I wouldn't be shocked at all. Like, that's the stock market nowadays, man. It's a different market because everybody has the data. 40 years ago, 60 years ago, 80 years ago, you didn't have all this data. You couldn't just type in Google in a second and get all the, historical averages on what it was. You couldn't do that back then. Now you can. Everybody's got the same data, okay? Now, here's another bigger point I got to make in regards to Russell 2000 and small cap stocks that not enough people understand this. Okay, listen. If we back this baby all the way up to February 2021, which seems like 100 years ago now, okay? The Russell's up 3%. 3% since February 2021? That's nothing. Nothing. I mean, we're talking that's 4.5 years ago. With a 3, that's all the Russell has to show for it is a 3% gain? That's insane. I mean, to like illustrate how insane this is and how long a period of time, I thought that's 10 months before my youngest was born. And look at him now. He's like a little grown boy now. Look at this boy. Like, he's like a grown little kid now, right? And 10 months before he was born, and all we have to show for the Russell is a 3% gain. Like, that's insane, man. That is absolutely insane. And so the moral of the story is here, smalls could run. They could run heavy. There's also a potential they run into the rate cut. Rate cut comes and they run after. So, I think it'd be a dangerous time to be have puts on the Russell or small caps or anything like that. I wouldn't want to be there. Unless you're very confident like the whole economy is going to crash and the whole stock market is going to crash. Like, if you believe the whole stock market and economy is going to crash in 2026, then I could understand playing puts on the small caps, right? But even then, it's still not a great bet necessarily because then the Fed's cutting to zero. You get a stock market crash and you get the economy to crash, the Fed's cutting to zero. And we could even do something we've never done in the history of the Federal Reserve before, at least in the United States, and go negative interest rates. You think it's not possible? Talk to the Europeans. Alrighty, next up here, NVIDIA. Then we'll get into Google and where AMD's headed from here, okay? NVIDIA. So, here's the deal, okay? You gotta go in depth in the numbers to really understand what's going on with a company like NVIDIA, okay? First off, their income statement was an A-, not an A+, not an A, because there was a couple little troubling things that were in this report, essentially, right? Now, obviously, all the numbers are going up, right? Revenue up big, gross profit up big, net income up big, like EPS up big. You could just say, this is great, right? It is great. But when you dive in the numbers, you find a few little troubling things here, okay? If you look at this same quarter last year, they did $30 billion of revenue, and the cost of revenue was $7.4 billion. So the cost of revenue was about 24.8% of revenue, okay? Now, what happened this latest quarter is, look at, revenue boomed to $46.7 billion. It's great growth. Was that 50% plus growth rate? Insane. Phenomenal. Amazing. But look at what happened to cost of revenue. Went to $12.8 billion, which is 27.5%. So we're talking about, 270 basis points of, essentially increase of, cost of revenue. So, that's one of those things that you look at and you're like, okay, margins, take a little hit in regards to that, right? Which is a little troubling because NVIDIA hasn't even seen the big AMD competition yet. The big AMD competition really hits in 2026 and then really hits in 2027. So the fact that you could already be seeing, essentially gross margin compression here should be a little troubling because they haven't even seen the big competitor yet. Like NVIDIA for the last few years has basically had no competition. Finally, NVIDIA is going to start to face some competition. So you've got to wonder where gross margins are headed in 26, 27. That is going to be something to kind of keep an eye on, right? And you got to understand, stock prices do phenomenal when revenue's increasing, margins are increasing, and net income's increasing. With NVIDIA here, you've got the revenue and you got the profitability increasing, but you don't have the margins increasing now. So that's something to keep in mind here. Research and development went up substantially on a year-over-year basis. Doesn't come as a surprise. They need to spend aggressively on that business. Sales and general administrative was up to $1.1 billion versus $842 million. Such a small line item, it hardly even matters for the business. Total operating expenses $5.4 billion from $3.9. Nothing crazy there. Operating income went to $28.4 billion from $18.6 billion. Now, they had other income basically help here of $2.2 billion versus only $189 million help in the same quarter last year, which made their total other income look phenomenal at $2.7 billion versus only $572 million in the same quarter last year. So that therefore made their net income look great and made their diluted EPS look great, which it would have been great no matter what. But you got to understand that the net income and diluted EPS would have technically not grown as fast as revenue, which is an important high-level point there, okay? And something you look at and you're like, oh, okay, so we're growing revenue, but at less of a fast clip than net income. Usually what you want to see in an ideal situation is earnings per share and net income growing more rapidly than the revenue growth, okay? So that's something to keep in mind here. Now, that takes me on my next point. You know, I posted this on X. I said, let me put you all on some game here. I've been grading income statements for 17 years. And, I was, showing folks on X, right? And some people, think I'm hating on NVIDIA. How's this hating on NVIDIA? I'm literally just pointing out the data. I'm teaching people how to properly look at an income statement and the pros and the cons and what's good and what's, something to keep an eye out for. And some people oh, you're hating on NVIDIA. Oh, NVIDIA is better than AMD, this stuff. And I'm just like, what are you guys talking about, man? I'm just trying to teach you a little something here. And the problem is a lot of the people that need the instructions, the teaching, they don't want to accept it. And I'm like, this is why I save a lot of this high level stuff for my private group and don't even post on social. Because you try to post something like this and like a teaching point on social, a high level thing like this, and some people, oh, you're hating on NVIDIA. Dude, I'm just pointing out the numbers. This is math. This isn't hating. If math is hating, I don't know what else to say. Come on, man, okay? If AMD did the same thing, I would show AMD. Here's what's going well with AMD, here's what's going bad. And that's how you got to think about companies. You got to think about them on a much higher level than fanboying. This is not sports. You got to look at your investments in a practical way and say, okay, this is going really well, this is not going well. I do that for all my companies. I can't just blindly look and be like, everything's great. Oh, no. I look at the numbers, I say, okay, this is really good. Okay, this is really good. Okay, this is bad over here. They have some work to do. Can they get this number better than this, right? That's how you play this game on a high level, right? No, on the 1000X page, which by the way, if you ever want to follow me on X or 1000X on X, I always have it linked in the description area of all my videos just so you guys are aware, right? But 1000X here, here's the issue also from the stock price perspective, okay? And this matters significantly. The revenue came in and it beat, but based upon NVIDIA standards, this was like a sleepy, put me to sleep beat. They came in with $46.7 billion of revenue versus $46 billion, right? Adjusted EPS came in at $1.05 versus $1.01. Cool. They beat on revenue, but in adjusted EPS, but it's such small numbers for NVIDIA and what investors are used to with NVIDIA essentially here. People are like, it's like nothing, man. And so that's, it's hard to get that level of excitement when you come through with, small beats for a company like NVIDIA, right? No. Here's another issue with the math, okay? This is not hating. This is just, I'm just showing the math in regards to this, okay? And why people should pay attention to this, okay? And I hope you guys are enjoying this. I hope you enjoy this higher level talk because, some people just talking math, you're hating on the stock. No, I'm just pointing out some math here, okay? Now, here's the deal. NVIDIA, if you look on a sequential basis, a quarter over quarter, numbers, right? NVIDIA grew revenue about 15% here, 16% here, 11% here, 12%. But this latest quarter, only mid-single digit revenue growth on a quarter over quarter basis, right? Now, based upon the trend, I think there's a high probability that in 2026, now keep in mind they're already in their fiscal year 2026, but I'm talking about calendar year 2026, okay? In calendar year 2026, I think it's very possible that NVIDIA will report some quarters where they have low single-digit growth on a quarter-over-quarter basis. That could definitely scare some people. People are already kind of getting a little bit scared here about a mid-single-digit growth rate, okay? Now, 27 is the one I think you got to worry a lot more about, because in 27, I think there's a pretty decent probability based upon the math and what type of numbers they should be doing. I think there's a decent probability that there will be some quarters in 2027 that they're actually reporting negative quarter-over-quarter revenue. Okay? Just something to keep in mind here. Now, you want some good news on the math side. And this is for the people that are very, very bullish on NVIDIA. I got some great news for you. NVIDIA guided for $54 billion of revenue. Now, Wall Street was not excited about that because Wall Street was looking for 54 or at least, if not 55, right? Keep in mind a couple things here. One, they have potential upside to this number if they're allowed to sell in China. We'll see what happens with that. But if they're allowed to sell in China, there's upside potential there. Same thing with AMD as well. Both those companies have potential upside. They did not guide for any China numbers, but if they can be allowed to sell there and China will buy the chips, then they could see some upside here. So just something to keep in mind. Even bigger than that, okay, listen. Even with this guide where it's at, the company should do roughly 17% quarter-over-quarter growth, which is a lot better than 5-6%, whatever they did this past quarter, right? Much stronger growth. So that's great news. Now, I don't think that's lasting. I don't think they're going to keep putting up a 17 or 20, because I think they'll probably end up, my guess is they'll probably end up doing like 20% revenue growth on a quarter-over-quarter basis, right? Year-over-year is going to be way bigger than 20%, but on a quarter-over-quarter basis, which is phenomenal. And that's going to get a lot of people very excited. But with that being said, I don't think that's lasting in regards to NVIDIA. I think this is kind of a little bit more of a one-off. And then once again, it's going to get harder and harder to keep pushing those numbers much bigger on a quarter-over-quarter basis. No, more good news for NVIDIA here is you look at the forward P, 2-year forward P, it's not expensive. Like you look at the forward P and you're like, dang, it's like double the market. Sure. But look at the growth rates. Are the growth rates not at least double the market? Yes. Not only are they double the market, they're way over double an average stock out there. Revenue growth, EPS growth. Like, dude, they just grew revenue like 50%. Like, that's a top tier company. That's faster revenue growth than even the great Palantir. Insane. Now, once again, don't get used to these 50% revenue growth numbers because we do know they're in a deceleration phase for this business, right? Where growth rates are getting smaller and smaller and will continue to get smaller and smaller over the next few years, right? But the moral of the story is it's not expensive. It's not like NVIDIA's trading at some insane valuation. If NVIDIA was trading at forward P right now of 100, I'd be worried because I'm like, ooh, those growth rates are going to shrink massively over the next 1 to 2 years. And, at a forward P of 100, that's going to be trouble for a semiconductor company. They're not. They're trading at basically a double market multiple. 2-year forward P, we could call it around double market multiple again. That's not crazy. That's not crazy given the growth rates of this company, right? Now, with that being said, here's a bearish point. And then here's how I felt about NVIDIA for quite a while. I think the stock's range bound until we get to 2028 plus. I think the stock's range bound from about 125 to 200. People are feeling bullish. They'll bid it up to about 200 range. They're feeling really bearish on NVIDIA. They'll send it all the way down to 125. And I think that continues for the next, I would say 2 or 3 years until we get to 2028 and beyond. And the reason being is you're going to constantly have this game of like NVIDIA's going to report really good numbers, but there's going to be big deceleration. And that's going to be an overall trend we'll continue to see, and it's not going to go away. And so that makes it a really, really tough situation for NVIDIA. In terms of like getting some insane stock price gains. Like I think the big gains in NVIDIA stock it already happened. Like, if you were in the stock the last few years, you made insane money. That was where the big money was at. And NVIDIA is going to keep putting up great numbers for the next at least 1 to 2 years, right? But deceleration. And it's going to get, it's going to get more pronounced as you get closer to 27, in my opinion, right? And then in 2027, what I see happening for NVIDIA is I essentially see a situation where they have single-digit revenue growth to potentially down revenue growth, revenue shrink actually in 27. And so that's why I think NVIDIA is just going to be a range-bound stock because I don't think we'll see major CapEx increases. I think even the 26 CapEx increases are going to be very minimal from a lot of the big tech companies. They'll increase, but it's going to be very minimal. They're all going to try to prove that basically they have their expenses under control in 26. And then 27, I could see a lot of the companies once again hardly increasing or some maybe even decreasing a little bit, right? And additionally, the big competition from AMD hits 26, 27. And they haven't had to deal with any competition for the last several years. And that's the thing you got to understand, like, this finally happening. So that's a whole situation, right? Now, the other thing you got to understand about this, and there's another high-level point here in regards to this, is NVIDIA goes through 3 to 5 year major chip cycles, essentially. And, you know, it's great. Like, the growth rates are phenomenal. And I'll show you in a minute, you know, with the numbers, the math, and it's just phenomenal when they go through these chip cycles. They last 3 to 5 years, and it's a boom for the business. This latest chip cycle started in 2023. So in 2027, you're going to be pretty much at the end of this chip cycle, right? Then you have kind of a trough in the cycle, and then NVIDIA is going to have their next cycle, right? Maybe it's the robot brain starts to take off in 2028, 2029, right? And next thing you know, the revenue starts to skyrocket again. But the moral of the story is here, the chip cycle, we're about mid-innings in this particular chip cycle, which means 26 and 27, we move to late stage of this chip cycle, right? So all the big money is made in the stock price at, you know, we can call it the beginning to middle of the chip cycle, not the end. The end is not where the big money's made. You might be able to squeeze a little lemon drops here and there, but it's not a fun time to be at the end of the major chip cycle. And I can show you this with the math around this, right? You can look here. Now keep in mind these years are actually like the year before, because it's NVIDIA's fiscal years, but NVIDIA fiscal years are usually like a year in the future. So the moral of the story, this is more like 09 than 2010, okay? And same thing for all these years. But here we go, 3.3 billion, 3.5 billion, 4 billion, 4.2 billion. Boom, big chip cycle, boom for the business, down to 4.1 billion. Tough, right? Then new chip cycle starts, 4.6 billion, 5 billion, 6.9 billion, 9.7 billion, 11.7 billion dollars. Major chip cycle, right? Boom, hit, nasty, down to 10.9 billion dollars of revenue, right? Negative. Then we had a little mini chip cycle kind of here, from 10 billion to 16 billion to 26 billion. Boom, growth dead, 26 billion again the next year. Then, oh my gosh, AI chips start taking off. 60 billion, 130 billion, right? We're looking at 200 billion-ish here and probably 250 billion at the top for this chip cycle for NVIDIA, which is unbelievable growth, right? And then we'll see likely in 27 or 28, like, it's going to be tough. It's going to be very tough for the company to even show any revenue growth. Like, you know, there's a decent probability, I think, they have revenue shrink in either 27 or 28. And so the moral of the story is here, like, you know, this is just the way game goes. And you got to understand that, kind of being an NVIDIA shareholder, right? Now, to even illustrate this point better, like, I put this kind of, you know, I got this quarterly year-over-year change so you guys can see this even better, right? Right here, boom, business is booming, right? Then it goes through a meh phase. Then we're booming again, unbelievable growth rates. Then we go through a meh phase, right? Several quarters of down revenue. Boom, we got another booming phase here. Oh, we got another down phase. Another booming phase, right? We're in that booming phase. And that booming phase is going to last for another year or two, and then it's going to conclude, and that will be that for NVIDIA, right? So it's just part of the process. You know, it's just math. Like, it's just the way the business works. Like, I don't know what else to tell people other than that, right? Google McDougal. Then we'll get into AMD and where AMD is headed from here. So news came out here today. Google has eliminated 35% of managers overseeing small teams in the past year. Whoa. It's not a small number. Like 35% of managers overseeing small teams? Okay, that's interesting, right? Now, a lot of people think Silicon Valley and all these companies are spending so aggressively on AI because they're going to be able to make a ton of money from that. And that's the only reason they're doing it. Silicon Valley, these big tech companies, Google, Meta, all these companies, right? Adobe, blah, 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 go through them. Yeah, they got Microsoft, OpenAI, they all got a phenomenal revenue opportunity. Phenomenal revenue opportunity to build revenue. But that's not the only point on why these companies are so bullish on AI, why they're spending so much. The hidden thing has always been they're going to be able to reduce the cost of doing business immensely. And they're going to put themselves in a position to have margins higher than they've ever had them in their company's histories. And they're going to build their businesses from being what we already thought was a top in profitability for companies to new levels that were like just in shock. Like, don't be surprised if some of these companies head to net margins of 40% plus, which in the past people couldn't even Could never go there mentally. Like a company having net margins of 40% plus, that's not possible. People thought like, oh man, you can maybe have 5%, 10%. If you're really great, maybe 15 or 20%. Now we're talking about net margins of some companies going to be pushing 40% plus. That's where we're headed here, folks, okay? Now, the cost-cutting measures are something that's going to be significant. And here's the thing, okay? If you look at like what companies pay a lot of money, guess what comes up? Silicon Valley companies, okay? It's not Walmart. It's not Chevron, Exxon. It's the big Silicon Valley type companies. Google, Microsoft, Netflix, right? Palo Alto, Salesforce, Adobe. Go through the whole list of them. Those engineers that work at these companies, very expensive. And you got to understand they have to pay a big salary. On top of that, they usually have to give them a bunch of stock, which then dilutes shareholder value. And then these companies have to then do big share buybacks. So it's not uncommon for, not even a high-ranking employee at these companies to make $300,000 or $400,000. $300,000 or $400,000 at most other companies would be like, senior vice president type money, or maybe even executive level type money. None at these companies. Like you could be the 6,900th most important employee at Google, and you probably make many hundreds of thousands of dollars a year in total comp between everything. So that's just something to keep in mind here. And that's the hidden reason these companies are spending so aggressively on AI, because they're going to be able to produce margins on the bottom line like we've never seen before, and be able to run more profitably than anything we've ever could even imagine. Okay. Next up here, AMD. Where's AMD headed? What's going on with AMD given this NVIDIA news? Okay. So here's the thing you got to understand, and the difference between, there's a lot of difference between AMD and NVIDIA, but the main point is AMD is at the beginning of their big cycle. NVIDIA is at the middle stage of their cycle, okay? Those are very different areas. Now, this cycle for AMD is going to conclude likely in 2028 or 2029 with the big, huge growth rates and all sorts of things, okay? Whereas NVIDIA is gonna have a really tough time in 27, 28. So they're just at different stages, and you got to understand, like, AMD is at the beginning stage. So regardless of what happens with NVIDIA revenue growth, like AMD revenue growth is going to be accelerating, not decelerating. You're going to see over the next several quarters acceleration. And what you're going to watch is a flip happen. This flip is essentially what's going to happen is, and this is going to happen within the next, I would say this will happen within the next 2 to 3 quarters. I'm not talking in the next 2 to 3 years. The next 2 to 3 quarters, what you're going to see is AMD's revenue growth percent is going to start outpacing NVIDIA's. Now, NVIDIA is going to keep growing much larger as a overall total number, but as a percent of revenue growth, AMD is going to flip NVIDIA essentially. And you'll start seeing AMD, in my opinion, I could be wrong, but I think I'll be right. What you're going to see is AMD's revenue growth start to outstrip NVIDIA, which is going to be a big moment, because that's going to be the moment that everybody's going to realize on Wall Street, AMD's here and they're for real. And so that's going to be, that's something I see coming. Wall Street doesn't see it coming yet, and I think it happens in the next 2 to 3 quarters. My only question is, does it happen in 1 quarter, 2 quarters, or 3 quarters? That's my only question. But it's coming, baby. Oh, it's coming. And so, I think some people are realizing, like, whatever happens with NVIDIA and their growth rates, it doesn't really matter that much to AMD. Like, I looked at AMD after hours, it's down 1%. Put me to sleep. Like, nothing. And so I think, and that 1% move, by the way, is really only because of the algorithms. If NVIDIA pulls the semiconductor index down like that, several percent, it's hard for AMD on that particular day if AMD has no news to go up, right? And so that's kind of what's going on here. The bottom line with AMD is we're headed to 200 next. 200. Then we're headed to 300 in 2026, in my opinion, 300 plus. And if all goes well, we could be 400 plus in 2027. And then 2027, we'll start to have conversations around AMD of, like I'm having with NVIDIA right now in 2025. We'll start having those sorts of conversations in 2027 for AMD about like their mid stage. They're about to enter their late stage for the chip cycle. Growth rates are going to slow substantially. We'll have all those conversations at that particular time. But that's not today. That's in 2027 we'll be having those conversations. So that's where the stock's likely headed. Now, I also looked at the options market because I said, this is what I see happening for the stock price. But I'm like, am I crazy? Maybe I'm crazy. So I said, what does the option market think here? Okay, now this is really fascinating because AMD right now is in the 160s. Okay, so I said, let me look at January 2027 call options. How expensive are, let's say, $300 strikes going for, right? Which is, a little less than a double up from here. If you want to buy a $300 strike that expires January 2027, you got to pay $10 for that. That's like almost double the stock price right now. And that's just between now. You need that to happen by January 2027. That's not that long in the future. That's what? Less than a year and a half from now? That's insane. So what something like that tells me is whoever's selling the call options is very scared that AMD is going to go up significantly. So they want big premium. Because usually like that far out of the money, like somebody might want $1 or $2 because it's so unrealistic that the stock's going there, right? So they might be like, throw me $1. Throw me $2. The fact that sellers want $10, that makes me say, I think a lot of people are scared that AMD is going to go up significantly over the next 1 to 2 years here, right? And then I even looked at what about do a lot of people think the stock's going to go to 200 plus this year? Because I think 200 plus is very in reach this year, right? Even after this massive move it's had. And so I looked at December 19th, 2025 expiration call options. And here's what I found. If you want a 200 strike, you got to pay $7. That means to break even on the buy, you need the stock to go to $207. You need $40 of upside between now and December 19th. It's not that long in the future. And you need the stock to climb $40. And that's to break even. We're not even talking a profit. We're not even talking a profit. Which shows me a lot of people are also scared AMD is going to still go up significantly more this year. So I think that's just, sometimes the option market can give you some clues to, how people are actually thinking out there, because people are bidding there. They got to be pretty confident. Like the stock's still going to go up significantly, not only this year, but over the next few years. So we'll see what happens. Okay. Appreciate y'all for joining me as always. Thank you so much for being here. Pin comment down there once again is for that Patreon sale for my highest end Patreon tier. Tier is usually $125. It'll be $49 in that particular day. That will be pinned comment down there. Enter in your name, your email, and then if you want to receive the deal via text, because some people don't check their email that often, you can put in your number. We'll send it over via text. When it does drop, that is access to my #1 course ever, Become a Master of the Stock Market, access to the stocks I'm buying and selling each week, how I build a portfolio with the Patreon portfolio, and full access to Patreon Discord chat. Much love and have a great day.